Hey everyone, welcome back to Inkmattic, the home of personal finance and investing. Don't forget to check out our blog, inkmattic.com. Links in the description with the most recent articles that we have. It's worth checking out if you're into investing, you want to find out strategies and so on. We are working on releasing a blog post every week, so go ahead and check that if you can. Much appreciated. Also, don't forget to claim your free shares. Stake, Freetrade, and Trading 212 are all offering free shares when you sign up to their platform and make a deposit from £1 to £50, depending on what platform you do. Remember to use our referral links. It really does help support the channel, and we both get free shares. So yeah, that being said, hope you're all doing really well, and thanks again for following on this journey. Really do appreciate it. We're at episode 58 of the Trading 212 portfolio series. Really do appreciate it. Don't forget to like, comment, and subscribe if you're not subscribed already. That would really help. And yeah, let's get started and roll the intro. A little spoiler alert before we do roll that intro is that the portfolio is doing extremely well. Hope yours is too. Leave a comment on how yours is performing. I would love to know. So yeah, let's roll that intro and get started. So to get started, we're going to run through the portfolio overview, and then we're going to run through how each and every stock is performing in this portfolio. I did run a poll on this on Twitter, and this is what you guys voted for. So yeah, let's get started and dive in. So the portfolio itself is at £11,308.41p. I've invested £9,672.93p. Returns at the moment is £1,635.48p. That is up 16.91%. If we look on the week, we did start the week at 12.39% in the green, 1,191, and we have gone up to 1,635 at 16.91%, almost hitting 17% returns, which is insane. And if we look on the month, you know, we've gone from negative 3.6% to up 16.91%, which is insane growth. You know, we've gone up so much. So let's dive into the stocks, and we'll do this alphabetically. So with Airbus, it's currently at $96, and I believe I purchased this around $96. What am I talking about? It's 96 euros. So I purchased this around 60 euros on average. I've got 5.5 shares, and I am up £181.37p. That's 61.49% in the green. So I'm really happy with that, and both the gains and losses and the FX fee are both working in my favor. Average price at the moment is €60 and 86 cents. So this is a really good stock in my opinion. It has definitely been impacted heavily with coronavirus and the pandemic, with people not traveling, airlines cancelling their orders, etc. But if we look at the before coronavirus did hit, it was around 134 euros, and the fact that it's already at 96 euros is showing that it is recovering a lot, and I hope it does continue to recover. I've got 5.5 shares, and this is for me going to be as part of my long haul stocks. I'm going to be keeping hold of this for a long time, because I think the commercial aviation industry in terms of plane manufacturers is pretty much a duopoly between Airbus and Boeing, and I think in the long term, as people become more connected and when things do go back to normal, that travel will be key. And with that being said, I think it is going to be a great stock. And the next one is Alibaba. So I'm not really sure what to think of it. In terms of the company itself, it is a great stock. Probably one of the best Chinese stocks that you can buy for the long run. However, they have had some issues with the Chinese government. The fact that the Chinese government did block their Ant loan company, Ant Group, that's it. They did block it, and I think it's just because the CEO or the founder, Jack Ma, said something negative. So it kind of does raise that question: how safe is a Chinese company? If the Chinese government can do that. So, and even for a huge giant like Alibaba, that is something to think of when you do invest in Chinese stocks. But at the same time, I believe the US did pass a bill that Chinese companies have to show their accounts, and if they don't, they get delisted. So that's another thing to look into, especially when you are buying Chinese stocks, and it's something to keep in mind. So at the moment, I've got 2 shares, Average price is at $211.52. I am up £68.42. That's 20.79%. So I think overall it is doing pretty well, and I'm pretty happy for where it is at the moment. And I'll be holding on to this for a while just to see where it goes. And potentially this may be a long haul stock. I may look to add to it, and it really depends on what takes preference or what I see is a good deal in terms of prices. So I don't really have anything set on what I definitely want to add to, but at the moment it's really just whatever's at a good price. The next one is Alphabet, and this has actually had a really good week. To be honest, it is up 2.1%. I've got 0.0769596 shares, and the only reason this is like this is because it's part of my pie. I've got £104 invested, and it's up 19.38%. Sorry, £19.38p. That's 22.81%. And the average price at the moment is around $1,400. So it's not too bad. It's a relatively small position compared to what the share price is. But, it's going to be part of my pie, and it's something that I'm going to be adding to on a regular basis. American Express has had a really good week. It is up 3.69%. And I think as the industry does open up to travel and tourism, and this is kind of that tourism travel card. I don't know why it's got that name, but apparently it does. So I've got one share roughly around £93 at the moment. I'm up £17.60p, which is actually pretty decent. I'm up 23.33%. However, the FX impact is taking away some of my gains, around £5, which is actually quite a lot, to be fair, when you come to think of an FX fee. So this isn't working in my favor too much. But, average price at the moment is $94.72. Sorry. Apple is actually one of my newest stocks in this portfolio. It's made a return, and the reason it's made a return is because of the M1 chip. I personally do hate Apple. I mean the MacBooks anyway. I do love the iPhones, but the MacBooks itself, I've had a terrible experience with them, and probably the most unreliable thing that I've ever used, especially the Intel-based ones. However, the 20 hours of battery life is definitely tempting me, especially with some of the YouTube reviews that I've been watching. And, potentially when travel does get back to normal, I will probably be picking myself up one of them, unless, some other Windows-based ones come up with better performance, and I mean better performance. So yeah, that being said, it is definitely sparked my interest with Apple again, and they've got their own silicon now, so potentially that could be something that might do well. So I've got 1.05 shares. I'm up £2.27p. That's 2.41%. My average price is at $117. So, it's still early days, and it's added as part of a pie. So we'll see how that goes. Aries Capital is another new stock, well, relatively new, to be honest. And it's a BDC company, and I've got 3 shares at the moment. I'm up £1.94p. That's 5.3%. Gains at the moment, I'm up £2.47p. That's 6.75%. Average price at the moment is $16.16. I believe they are paying a dividend at the end of the month, so I'll be looking forward to that, and I will give you an update on when that is. AT&T isn't a great stock at the moment, if I'm honest. It's probably one of the stocks that are still in the red. I've got 10.5 shares. I'm down £11.25p. That's 4.65%, and both I'm at a loss, and the FX impact is also impacting my losses as well. Average price is at $29.70, so not too great, to be honest. They are a dividend aristocrat, but realistically, are they going to be able to continue to be a dividend aristocrat? Because I think they are going to be finding it tough over the next few years. So that'll be interesting to see how that one goes. Potentially, I think AT&T might be on my get rid of list. A stock that I'm potentially leaning towards selling. Aviva is another great stock, and it's probably one of my favorite UK stocks at the moment. I've got 170 shares in this, roughly around £575 in value. I am up £157.07p. That's 37.5% in the green. My average price is at £2.46p. So they are a great dividend payer. I do believe they have slashed their dividends going forward, but I think it's still at a great rate. Barrett Development is another one of my top picks for UK companies. And with Barrett Development, I have 27 shares. I am up £50.28. That's 39.42% in the green. Again, another fantastic company. And if we look on the week, it is up 4.83%, and the month is up 22.8%. So it has seen some considerable growth, and it is, to be fair, like one of my top picks in the UK sector, or the UK stock market. Moving on to Boeing. Boeing has actually had a really good week, to be honest. It is up 7.39%. Current price as of close on Friday is $232. I have 5 shares approximately. Returns at the moment, I'm up £176.73. That's 25.64% in the green. So yeah, I'm pretty happy with that. My average price is at $173. I think the fact that the 737 MAX has had its approval to fly again, but the markets are still down, and Ryanair has actually put in a purchase for that. And I'm not going to lie, used to fly Ryanair short, because it was just bare cheap. But now I'm thinking there's also that, survivability factor with flying with Ryanair. Now that you have that, the planes could come down anytime. And I'm not going to lie, I think they should have just scrapped this plane. It is hugely faulty, and it's got that negative, stereotype to it now. So personally, when I fly, I'll be avoiding the 737 MAX, and if I do get a change in that, I'll be demanding a refund. I don't care how much it costs. I ain't getting on that tin can. That's probably going to fall in the sky. So yeah, that's for me. But in terms of a stock and investor perspective, it's still a great company. They are quite diverse, and they've got other planes in their fleet which do survive and don't really crash. So I think that'll be an interesting one over the next few years, because I personally think, like, a lot of people may not know about planes. I don't really know too much about planes. I know enough of the ones I like and ones that I don't, and the 737 MAX is one that I ain't getting on. So with BP, it's had actually a pretty good week. It is up 4.74%. I've got 50 shares. I'm down £41.03. That's 22.92%. I think this is going to be an okay short to medium term. British Land has also been doing really well, and it has actually shot up quite a bit over the last week. It is up 8.72%. And on the month, it is up 32.99%. So it is actually doing really well. I've got 70 shares. I'm up £41.64. That's 13.15%. So that will be an interesting one to see. So with Cloudflare, the current share price is $77.41. I've got 15 shares, and it is just completely blowing my expectations. It's currently total value of those 15 shares is at £863.12. Returns at the moment, £649.95. I am up 304.9%. So, it's completely blowing my expectations. Is actually up 311%. However, the FX impact is definitely making an impact on my returns. That's quite a mouthful. I'm down. That's taken away at £14 of my returns, which is around 6.94%. I think it's going to be a great stock in the long run. Directline is also a good one. It is up 2.33% in the last week. I've got 100 shares in this. I am up £31.60. That's 11.67%. It's kind of one of the ones that kind of sticks around this price, and it hasn't really gone past below that much. And the last one that I'm going to go through today is Energy Transfer. So with Energy Transfer, it's at $6.93. I've got 430 shares, roughly around £2,213.86. I'm up £93.62. That's 4.42% in the green. However, if we exclude the FX impact, I'm up 7.87%. That's £166.79. Whereas the FX impact is actually taking a huge chunk out of my returns. I'm not even going to lie, 3.45%, and that's £73.70. And it kind of does show you how the FX impact does impact your returns overall, and it's worth noting that when you do trade in foreign currencies, stocks like Energy Transfer. But it also does give you a good idea of, sometimes it is good to hold your stocks and kind of ride the wave out. So for example, if we look at the last year view, and I started buying this around July around $7 or something like that. But then it did hit lows of $5.36, and I know some people have actually close their position because they thought it was going to go down. But sometimes it is good to like stand your ground, and if you do believe in a stock, sometimes it can go up as well. And I'm glad I held in and kind of stayed patient, stayed calm, and kind of ride through this, because I believed that this was going to hit around $10, and it is kind of heading that way. However, I do think there might be another drop in the future, but that's just me, which I probably expect to see next month or the month after. But I'm going to be holding on to this for a while, and it continues to pay dividends for me. But yeah, that's it for this video. I know it's a little bit long, and I did say I was going to go through the entire portfolio. However, we're not even halfway through, and it is already about 15-16 minutes long. So I don't want to bore you guys with this, and I'll be doing the same and going through the next set of stocks I have in the portfolio in the next week's video. So stay tuned for that, and don't forget to like, comment and subscribe. And if you're interested in trying out Trading 212 or any of the commission-free brokerages, you can use the links in the description, and you'll get a free share when you sign up to them, and I'll also get a free share. It really does help out, support this channel. And don't forget to check out Inkmattic.com and our latest blog post there with Orca and Freetrade. Highly recommend checking it out, and the blog itself. There are a bunch of offers on there that may be useful for you. And don't forget to follow us on Twitter, where I am engaging and tweeting on the daily. So don't forget to check those out. Leave a comment, subscribe and like this video. It really does help. See you in the next one.